Dividend reinvestment plans, or DRIPs as they are less colorfully known, are, in my opinion, the best way for small or new investors to invest long term in stocks. But how does one get started? And which companies are available to be purchased via DRIPs? Well, that'll be the subject of this video. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome back. All right, dividend reinvestment plans. Actually, hundreds of companies offer their stock directly to investors without having to go through a broker or anything like that through dividend reinvestment plans. But how do they do it? Well, they actually have investor services department that will do that. You could contact their investor services department, fill out an application. They'll send you the prospectus. You fill it out, send it in with a check payment, and they'll send you confirmation a few days later. Boom, you're in like Flynn. However, most companies that have DRIPs actually will utilize a transfer agent, right? And these transfer agents kind of act as a substitute investor relations department for them. But the actual process of acquiring the stock is very much the same. Now, there are actually four major transfer agents that I want to call attention to in this video. The largest of which, with the largest selection that is ComputerShare. And that's www.computershare.com. Now you can go there, you can peruse the list of stocks that are available for purchase, and you can make your decision. Now, the good thing about ComputerShare is that they have an enormous variety of dividends and direct dividend reinvestment plans and direct stock purchase plans to choose from. In fact, most large U.S. companies that pay dividends can be acquired through a ComputerShare, right? Now, even certain technology companies that previously had been off the list, Alphabet, even Microsoft, eBay, all of them now have, and Apple, they all now have dividend reinvestment plans that can be acquired through ComputerShare. Now, after you review the prospectus online, you can either download the application form, or the transfer agent will send you one. You fill it out, and again, include your payment, send it to the transfer agent. They will purchase the stock in your behalf, send you a confirmation letter a few days time, and you're in, right? You can just sit back, you either collect your dividends or have them reinvested, and you're a long-term investor at that point. Now, that's not to say that there's no liquidity. In fact, there's a great deal of liquidity. You can, in fact, sell your shares in any of the listed companies at pretty much any time you want, but it won't be done through an electronic system. You would actually have to either call them and tell them that you want it sold, or fill out a redemption form, coupon on the statement, send it back to them, and then they'll sell the shares as a part of a batch sale, and then release the proceeds to you, right? So ComputerShare, I would say that's the 800-pound gorilla in the category. Look them up. The second is the former American Stock Transfer and Trust Company, now known as AST Financial. Their web address is www.astfinancial.com. Go there, just like with ComputerShare, peruse the companies that are available. If you see stocks that you feel comfortable with and you've done some research for, again, review the prospectus that's listed on the site. You can download the application form, fill it out, send it in. You'll receive your confirmation, and after the payment is made, you're in. All right. The third major transfer agent with many hundreds of issues, some domestic companies, they actually have some international stocks available, is Equiniti, that's formerly the transfer agent services of Wells Fargo. And their website is https://EQUINITI.com, right? And again, you would go through very much the same steps as you would with the previously mentioned transfer agents, and they have a very wide selection of stocks to choose from. All right. And the final is Continental Stock Transfer Company. And that website is www.continentalstock.com. Now, they have a much smaller selection, and their selection is mostly small banks and a couple of insurers and some REITs. But still, you might want to look at it. Pick one that you feel comfortable with, invest in it, you're good to go. What's the minimum for most of these dividend reinvestment plans? Well, it varies. For most, certainly with ComputerShare and AST Financial, the minimum initial investment is from $250 to $1,000, depending upon the stock issue, right? Now, once you have made that initial investment, you have to decide on the application, how would you like your dividends to be handled? Would you like them reinvested, purchase more shares, or would you like the cash spent out to you directly? Well, that's easy, right? Depending upon what's best for your particular situation, right? And at the end of the year, the end of the tax year, they will send you a 1099 form for each stock that you purchase, which will basically tell you how much income you have received from your underlying issue, right? Now, there's one thing that's kind of a bummer with these direct stock purchase plans and dividend reinvestment plans, and that is, in order to open an account, the fees can be kind of onerous, right? For some of the companies, fees for opening can be as high as $15 an issue. And remember, you have to open an account for each individual issue, right? Now, if you invest a significant amount of money initially, let's say 10,000 or so, which is the maximum for most of the drips that are mentioned, then a $15 fee is minimal, right? But if you invest the minimum initial purchase, say $250 or $500, actually that $15 fee kind of hurts, right? But if your stock performs, and certainly if it pays dividends, which it does, which it would, because it would have to do that to be a part of a dividend reinvestment plan to begin with, then that initial fee will be eaten up in a few dividend payments. So, it's not the end of the world, but just keep that in mind. So, would I suggest investing in drips or dividend reinvestment plans? Yes. It is certainly the way I've done it over the last 25 years or so since I've been investing directly in stock issues. You get to see investing from the interior, because some of these companies, they actually send you physical annual reports and things like that, and you get to touch it and feel it, look at it, really examine the company, its directors, its officers, any legal litigation they're involved with. Real interesting stuff if you're an investing nerd like I am. And you get that because you own the stock directly, not through a broker. All right. Thank you very much.